Well, let's start with the market action, where positive global cues helped the bulls regain some lost ground today. So we saw the Sensex gain nearly 1,300 points and the Nifty added 400 points. The Nifty now back above the 17,300 mark. Mid-caps faring even better, with the index rallying more than 3%. Financials were not far behind either. Rima joins us now to wrap up the market action. Rima, a rebound for our markets today.
Market surge led by a big global risk-on rally. The Sensex gaining more than 1,200 points. The Nifty well above 17,250. All the Nifty key indices closed in the green. The mid-cap index also soared, with the advanced decline ratio looking solid, with nearly 5 stocks in the green for 1 in the red. The leadership came in from the banking stocks, and here we got some very strong business updates from banks as well as NBFCs. So those numbers looked encouraging, and that fueled the rally in the banking sector. The Nifty Bank was up more than about 1,000 odd points. But IT and metals as well contributed on the way up. So talking about individual stocks, IndusInd Bank and M&M Financials business updates look very strong. Those stocks were higher in trade. In the metals pack, you had Hindalco, JSW Steel, Tata Steel rallying, as there was this big rally that we saw in global markets, not just in US markets overnight, but there was follow through in Asia as well as Europe. And IT stocks ahead of the earnings season saw strength led by Wipro, TCS as well as Infosys. Tomorrow, Indian markets are shut. Today, there was no trade taking place in China as well as Hong Kong. So there was a bit of a truncated week taking place across Asia, but this turned out to be a solid session for our markets.
Yes, Rima, many thanks. We will be closed for the Share tomorrow, but of course, global markets will be tracked here on CNBC TV18. In the money market, the rupee gaining more than 30 paise against the dollar today. The Indian currency remains above the 81 mark against the dollar. The greenback did weaken against most currencies after a strong run-up in the last few weeks. Crude oil prices are rising once again. Both Brent and NYMEX are up as OPEC nations could consider another cut to production. On Wednesday, OPEC will mull cutting output by 1 million barrels a day, and this is driving oil prices higher across the world. Back home, India's trade deficit for the month of September has marginally eased to around $27 billion from nearly $28 billion in the previous month. However, the September trade deficit is almost 19% higher year-on-year. Exports have contracted by 3.5% year-on-year to $33 billion. However, imports have grown by more than 5% year-on-year to $59 billion. And after the government hiked the import duty on platinum from 10.7% to 15.4%, sources say the move is aimed at curbing illegal imports of gold in the garb of platinum. We learned the Customs Department found several cases where platinum alloys, which is 4% platinum and rest gold, were being cleared at the reduced import duty of 11%. So what do our markets make of the current state of the economy? CNBC TV18 has polled top fund managers after the Reserve Bank rate hike on Friday. 94% expect another hike in rates come December. That is when the MPC is to meet again, and they expect the repo rate to peak by March next. Prashant is standing by with the exclusive details of the CNBC TV18 fund manager poll. Prashant.
Well, the big question, which is very relevant here in India and globally as well, is where will central bank policy rates, RBI in our case, and globally, where will they settle at? How high is high enough? We conducted a poll of debt fund managers and experts, which threw up some interesting insights. Well, first, the question that we asked them was, where do they see repo rate settling by December? Almost 94% of them expect the Reserve Bank of India to hike the repo rate in its next policy meeting in December. Also, over 80% now expect a hike of between 35 to 50 basis points. Most of them also see repo rate peaking at between 6.25 to 6.5%. 50% of the respondents see the repo rate peaking by March of 2023. Next, about 69% see the RBI changing its stance to neutral in February next year. Interestingly, most experts don't see the 10-year government securities yield rising beyond 7.5%, which should come as a relief to equity fund managers as well. The yield which is polled is not much higher than where we are right now. Even on the currency, the rupee, the dollar rupee, despite the recent scare, a majority don't see it going past 83 to a dollar, not much by way of depreciation from here. Despite the relative stability that we've seen here in India amidst the global turmoil, market participants do tell us, though, that they will continue to closely watch geopolitics, global sticky inflation, and, God forbid, a financial accident which, if it were to come to pass, could throw things into disarray.
All right, Prashant, many thanks for joining us. That is the CNBC TV18 poll on where the market expects rates and the rupee to be over the next few months. On to another exclusive analysis. Nearly 15% of BSE 500 companies have a foreign currency loan exposure of 3.5 lakh crore rupees. As the rupee weakens against the dollar, chemicals, refineries and healthcare are the most vulnerable sectors with the high forex loan exposure. Sonal joins us now with the findings. Sonal.
The weakness in rupee is all one can talk about, and it has broken previous records last week. So my colleague Yusuf and I thought, let's look at some data to focus on which companies have a higher forex exposure. So 71 companies from BSE 500, and this excludes banks and financials. They have a foreign currency exposure of 3.5 lakh crore rupees and aggregate borrowings of 15.2 lakh crore rupees, out of which 23% is foreign currency loan. This is as per data from Ace Equity. And sectors which have the highest foreign loan exposure are chemicals, refineries and healthcare segment. Breaking it down to individual companies now, the one with the highest percentage exposure to foreign debt. Alkyl Amines, small loan amount, but all of it is in foreign currency. Glenmark Pharma with almost 90% debt in forex, Shipping Corporation at 100%, Oil India at 85%, Adani Ports as well at 66%. Moving on, UPL at 61.5%, there's Polyplex at 58%, SGVN at 55%, and ONGC at 53%, just to name a few. So it will lead to high interest outgo in case of dollar-denominated loans and will lead to higher expenditure. Important to note, the breakup of the forex loan in a specific currency is not available. But with some examples, also wanted to point out that a lot of these companies have substantial export revenues as well, thereby negating the impact of higher interest outflow, because dollar strengthening will aid earnings as well for them, right? Now, the revenues in export markets could be a lot more and not necessarily denominated in dollars. So that is something that we need to remember. Alkyl Amines has 23 crore of debt in foreign currency, but 270 crore worth of exports. UPL has 16,000 crore debt in foreign currency, but 36,000 crore in terms of revenues from exports, out of which 7% is from Europe, 37% exposure is to North America. Glenmark Pharma has 3,300 crore of debt that is in foreign currency and 6,700 crore of revenues from exports. Sudarshan Chemicals, that exports to 80 plus countries, has almost 1,000 crore revenues from exports and 480 crore of debt in terms of forex. Additionally, as per Bloomberg, nearly $11 billion worth of foreign currency notes are getting matured over the next 1 year, while bonds worth $500 million each are maturing in October for NTPC and BPCL. Next year would see bonds of similar values getting matured for Vedanta Resources, IOCL and ONGC Videsh, to name a few here. Now we are talking about loans, right? So let me also focus on revenues. The exposure will be higher for some names in the specialty chemical space because of higher exports to other countries. Many of these companies will see higher exposure because India's exports of chemicals hit a record high at $29 billion in FY22. That compares to $14 billion in FY14. We have names like Vinity Organics with 69%, Clean Science at 70%, Galaxy Surfactants with 62% revenues coming in from exports. For fine organic, Naveen Fluorine, Atul Limited, NoSil, Aarti Industries, Deepak Nitrite and Alkyl Amines, all of them have exposure anywhere between 70 to 70% in the list that I have mentioned. And out of this, for some companies, we know the exposure to Europe as well. And that is where we are seeing crisis due to energy prices, and this is something that could pressure on demand as well for these companies. So the numbers on the screen are a percentage of the total exports and not the total revenues that is the companies do to Europe. Anupam Rasayan has 46% of total exports to Europe, which is followed by Vinity Organics. Naveen Fluorine as well has almost 60% exports. PI Industries at 10%, Neogen at 27% of total exports to Europe. So many companies have sizable exposure to Europe as well, making them vulnerable to demand and added woes of currency depreciation there. Important to note that every company has its own hedging mechanism in place, so the net effect on earnings depends on that. But these are just some numbers that we wanted to focus on.
All right, Sonal, many thanks for joining us. The United Nations body has warned that a drive by central banks of richer nations to hike interest rates in response to soaring prices is an imprudent gamble that could dangerously backfire. The report, which has been prepared by the United Nations Conference on Trade and Development, suggests that a course correction is required to prevent a cascading series of debt, health and climate emergency for poorer countries. Now, after the mega 5G rollout last week, the government has allocated 26,000 crore rupees to set up 25,000 telecom towers in the country over the next 500 days. The government will utilize the Universal Service Obligation Fund for the deployment of these towers. It will use its special purpose vehicle, Bharat Brand Broadband Network Limited, for the same. September has turned out to be a sluggish month for Indian FMCG companies, with sales declining by nearly 10% versus August, according to retail analytics firm Bizom. Cautious stocking up by consumers amidst inflation worries and a slowing rural income were reasons for sales showing a slower pace. Shilpa Ranipeta joins us now with more. Shilpa, what seems to have impacted September sales?
Well, a slowdown in rural areas has dragged down FMCG sales for the whole month of September. Now, according to data from Bizom, rural sales were down over 14% in September, and that was on the back of inflationary pressures, while urban areas saw 1% growth over the previous month. Now, overall sales too declined nearly 10% in September, and this is on account of both a rural slowdown and also a lull after heavy stocking was seen in August for Independence Day and for Ganesh Chaturthi. Now, from a category point of view, beverage and packaged food sales, those were down about 6% or more. Commodity sales were down nearly 15%. That is on the back of edible oil prices, edible oil companies cutting prices. But given how prices moved in the past year, they are still up nearly 18% on a year-on-year basis compared to September last year in value terms. Now, personal care sales also were flat. Confectionery sales were down about 5%. Bizom says that there is cautious stocking that is happening in rural areas amidst inflationary worries. Also, erratic monsoons have impacted rural incomes. However, October should see a pickup in the run-up to Diwali. Partly too corroborated by Bizom's data, saying that September was that lull period between festivals and hence the lower sales, though festive season per se doesn't see much of an uptick during the festive season for the FMCG industry. But Parle does expect specialty products like confectionery and gift packs to pick up closer to Diwali. Back to you.
All right, Shilpa, many thanks for joining us. Speaking of retail sales, according to the Federation of Automobile Dealers Association, total vehicle retail sales grew by a healthy 11% in September versus last year. Among categories, two-wheeler sales rose 9%, while three-wheeler sales recorded a whopping 72% jump. Meanwhile, passenger vehicle sales were up 10%, commercial vehicle sales up 19%. Auto dealers are optimistic of better sales in this festive season. Expect passenger vehicle sales to be at a decade high during this period. Kia India has recalled over 44,000 Karen units to inspect and fix any potential error in its airbag control module software. The automaker said that any update needed would be done free of cost. We will head into a break, but up next, the Election Commission proposes to mandate more disclosures from political parties to explain possible ways to finance promises made to voters. More on that when we return.